Good afternoon and welcome to your weekly FX Options Report. Today is Wednesday, March 24th, 2010. In midweek trade, the U.S. equity markets are trading modestly lower. In today's session, European debt concerns as well as mixed economic data has been the focus. Now, in terms of U.S. economic data releases, the Commerce Department reported that durable goods orders for the month of February rose by 0.5%. Now, at the same time, January orders were upwardly revised to 3.9% from 2.6%. For U.S. economic data, new home sales unexpectedly fell for the fourth straight month to an annual rate of 308,000 in February. Now, overseas, Fitch Ratings downgraded Portugal to a double A-, and at the same time, Germany and France backed IMF participation in a Greek bailout. In the spot FX market, the dollar is seeing broad-based gains against the major currencies, including the euro as well as the Japanese yen. Now, the euro-dollar did fall to 10-month lows today, and this does come despite European PMI and German IFO coming in better than expected today. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And now for a closer look at the major FX option pairs, let's move on to your daily technical report. Now, starting out with the AEX, which is the U.S. currency against the Australian dollar, the downside does prevail. The RSI is mixed with a bearish bias, and the preference of trading central analysts for the AUX is short positions below the pivot of 116.50, with targets standing at 106 and 102 in extension. And for the BPX, which is the U.S. currency against the British pound, the upside does prevail. Now, for that pair, it is rebounding on its new support, and the RSI remains within a bullish channel. Now, the preference of trading central analysts for the BPX is long positions above 65, with targets standing at 68 and 70 in extension. For the CDD, which is the U.S. currency against the Canadian dollar, it is under pressure. The RSI is bearish and calls for further decline, and the preference of trading central analysts for the CDD is short positions below 104.50 and targets standing at 197.15. And moving on to the EUI, which is the U.S. currency against the euro, the upside does prevail. The pair has rebounded on its bullish channel lower boundary, and for the EUI, the preference of trading central analysts is long positions above 72, with targets standing at 76.15 and 77.50 in extension. For the SFC, which is the U.S. currency against the Swiss franc, the upside does prevail. Now, the pair is rebounding on its bullish channel lower boundary, and the RSI is supported by a rising trend line. Now, the preference of trading central analysts for the SFC is long positions above 105, with targets standing at 108.75 and 110.25 in extension. Last but not least, let's take a quick look at the YUK, which is the U.S. currency against the Japanese yen. Now, a rebound is expected for that pair. The YUK has broken above its short-term channel upper boundary and should post a further up move. The preference of trading central analysts for the YUK is long positions above 88, with targets at 93.50 and 96 in extension. Now let's move on to your weekly trend opinion for the major ISC FX option pairs. Last week, the U.S. dollar gained against all of the majors except the Japanese yen. This week, the U.S. currency does remain well-directed. In terms of portfolio performance, it currently stands at 1,427.46% since its inception in August of 2007, and since the beginning of this year, it is up by 147.34%. Now, we do have one trade alert for you here, which is for the EUU. Now, the pair has struck against the medium-term bearish channel upper boundary, and trading central analysts are taking a look at this because it should face further weakness as the daily RSI is turning down. Looking ahead to next week, trading central analysts will be looking at the CDD, the NZD, the AUX, and the SFC. Now, they will be taking a close look at the CDD because it is breaking below its previous low, and trading central analysts will be cautious on this pair because there are false breakouts, and that is common for the CDD. They will be looking at the NZD because it is currently challenging its channel lower boundary, and the daily RSI is capped by a declining trend line. And for the AUX, it is under pressure and approaching strong support, and the daily RSI does lack downward momentum. Last but not least, for the SFC, it is challenging its bullish channel lower boundary, and the RSI is supported by a rising trend line. And that does wrap it up for your weekly FX Options Report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great day.